The United States is paying more interest on its debt than it spends on its entire military, and no one is talking about it. More than $36 trillion. A number so big it doesn't feel real, but the consequences are. Because this debt isn't just growing, it's accelerating, and the people who built it are no longer trying to stop it. They've made the system too complex to question, too fragile to fix, and too dangerous to expose. What they're hiding isn't just how much the US owes, it's who holds the debt, why they need it to keep growing, and how fast it can all collapse. This is not about politics. It's about the moment a financial illusion becomes a global crisis. And to understand what's coming, you need to see how the lie began. They called it stimulus, they called it relief, they called it growth. But what they never called it was what it truly is: debt. Every administration, every fiscal package, every urgent vote in the middle of the night came with the same hidden clause: we'll pay for it later. But later never comes, because the system doesn't pay off debt, it replaces it, and the numbers always get bigger. This isn't a bug, it's the blueprint. For decades, Americans were sold the idea that borrowing is investment, that printing money can create value, that debt, if used correctly, is a sign of a modern economy. And they weren't entirely wrong. Debt can fund schools, hospitals, infrastructure. But only if it's temporary, only if it's repaid, only if it's accountable. That's not what happened. Instead, each crisis became an excuse, each cycle became permanent, and the real addiction wasn't to spending, it was to avoiding the consequences. Because here's the truth they won't say out loud. The debt isn't accidental, it's manufactured. A manufactured illusion of progress, built on credit, backed by hope, and sustained by complexity. Most citizens don't know how the national budget works. Most journalists don't explain it, and most politicians count on that ignorance. They bury it in language, call it fiscal expansion, monetary easing, quantitative support. They pass 1,000-page bills that no one reads, filled with numbers that no one checks, and debt that no one plans to pay. They say it's for the people, but the people get the bill, while the benefits flow upward. Because the real winners of this system are not those receiving the checks, but those printing them, those who lend to the government and charge interest forever. In 2001, the US debt was around $5 trillion. By 2008, it had doubled. By 2020, it had tripled again. Today, it's more than $36 trillion, and there is no ceiling, only a staircase that leads nowhere. And yet, every time they raise the debt limit, they promise it's the last time. Every time they increase spending, they promise it's necessary. Every time they slash taxes without balance, they promise growth will cover the gap. But the gap keeps growing, and the lie keeps working. Because the lie is beautiful. It says we can have everything without cost, that debt doesn't matter, that we're too big to fail. But reality doesn't care about slogans. At some point, the interest grows faster than the economy. The repayments eat the budget, the confidence weakens, and the machine starts to shake. What began as a strategy becomes a trap. What began as flexibility becomes a cage, and what began as a lie becomes a threat. This is how the illusion is sustained, through language, through fear, through inertia. They don't need you to believe it's safe, they just need you not to question it. Because if people start asking the wrong questions, the system can't answer them. And in a world where the foundation is debt, the most dangerous thing you can do is ask what happens if it breaks. Now that you've seen the illusion, let's follow the consequences. Because in the next chapter, you'll see how debt isn't just a number, it's a predator, and its hunger is called interest. Debt is easy to ignore until the interest starts to speak louder than everything else. Most people think of debt as a balance, a number on a screen, something to be paid later. But interest, that's what arrives now, quietly, daily, relentlessly. And right now, the interest on the US national debt is consuming more than the entire military budget, more than social programs, more than education. It's not an expense, it's a black hole, one that expands with every tick of the clock. Every year, hundreds of billions vanish into the void of interest payments, not to build roads, not to fund hospitals, not to feed the population, but to feed the machine that keeps the debt alive. Because unlike a loan between friends, the national debt never sleeps. It compounds. And with higher interest rates, that compounding accelerates. In 2021, rates were near zero. By 2024, they climbed above 5%. Now multiply that by trillions, and you begin to understand the scale of the storm. What was once manageable becomes metastasized. This is the phase where debt stops being strategy and becomes servitude. The government can't shrink spending fast enough, can't grow the economy big enough, can't raise taxes high enough to outrun interest. It's like trying to swim against a rising tide with a bag of rocks strapped to your back. And the irony is brutal, because as interest takes over, the programs designed to help citizens start to get cut, while the payments to creditors keep flowing without pause. This isn't policy, it's math. And math doesn't negotiate, it doesn't vote, it doesn't care who's in power. It simply adds up. And what it adds up to is a future where the budget isn't written by lawmakers, but by lenders, where every dollar earned by the state comes pre-tagged, first for interest, then for everything else. This is the silent takeover, not by foreign invaders, but by financial inertia. And here's the part almost no one talks about. Interest doesn't care who owns the debt. Foreign governments, private investors, banks, or even the Federal Reserve. Whoever holds the bond gets paid. And as the interest pile grows, so does the leverage, so does the risk. Because the day the government can't pay, or chooses to delay, or investors begin to doubt, the market reacts. And it doesn't react slowly. The cost of borrowing skyrockets, the confidence collapses, and suddenly, what looked like a stable economy reveals itself as a house built on rolling interest. And it's not a matter of ideology, it's a matter of time. They call it the cost of doing business, but when interest consumes everything, there is no business, only survival. This is the reality no headline will show. A nation spending more to service its past than to invest in its future. This is what happens when you let the interest run faster than the income, when you believe the beautiful lie and forget that numbers don't forgive. Because in the world of debt, the real power doesn't belong to those who borrow, it belongs to those who collect. They say the debt is manageable. They say the economy can handle it. But what they never say is who actually holds the chains. Because the national debt isn't just a number, it's a web, and every thread connects to power. Some say it's foreign governments, others blame big banks, but the truth is far more entangled. A massive portion of US debt is owned by institutions inside the system itself. By pension funds, by insurance companies, by the Federal Reserve. Yes, the central bank that regulates the economy also holds trillions in government debt. The lender and the buyer are on the same payroll. This is what makes the system so deceptive. It looks balanced, but it's internally looped. It feeds itself. One agency issues the bonds, another buys them, then returns the interest to the same ecosystem that created the debt. It's not a conspiracy, it's a design. A self-referencing machine where accountability vanishes in the complexity, and where the lines between public debt and private profit become impossible to trace. But here's where it gets dangerous. The more debt the government creates, the more institutions depend on it, and the more the entire financial system becomes addicted to its existence. This is no longer about borrowing to fund a bridge. It's about creating bonds to feed banks, to stabilize portfolios, to keep the illusion of liquidity alive. Now add to this the foreign layer. China, Japan, Saudi Arabia, foreign governments hold over $7 trillion in US treasuries. Why? Because they believe in the dollar. They trust in the system. They assume it will never default. But that trust is not infinite. And here's where history starts to whisper. There's something called Ferguson's Law. It's not theory, it's a pattern. It states, when a global superpower begins spending more on interest payments than on its own military, its dominance is no longer secure. It happened to the Habsburg Empire, to the Ottoman Empire, to the Burgunds, to the British Crown. And now it's happening to the United States. For the first time in nearly a century, the US is spending more on interest than it does on defense. 3% of GDP to service the debt, less than that to secure the nation. And that balance matters, because if you can't protect your empire, you can't keep it. Ferguson's Law isn't just economic, it's existential. It tells us the moment when interest stops being a line item and starts becoming a warning sign of decline. And still, the web keeps growing, because there's no incentive to stop. Every investor, every institution, every creditor is tied into the system. Cutting the debt would mean crashing their own portfolios. So they stretch the web, add more threads, repackage the bonds, delay the collapse. But every web has a limit, and every empire has a tipping point. This one may not come through war, or protest, or revolution. It may come silently, through spreadsheets, through credit downgrades, through shifting yields. One day, the buyers may stop buying. The holders may start selling. The trust may snap. And when that happens, the web doesn't untangle. It breaks. The system doesn't run on money. It runs on belief. US debt isn't backed by gold. It's backed by trust. Trust that the government will repay. Trust that inflation will stay under control. Trust that US bonds are still the safest asset on earth. But what happens when that trust begins to shake? The United States has never defaulted on its debt, not officially, but the rules keep changing. Payment deadlines get extended, debt ceilings are raised, emergency clauses are triggered, and the world keeps watching. Because for decades, the US Treasury was considered untouchable, a guaranteed investment, a safe harbor in storms. But the storm is now inside the harbor. Each time Congress delays a vote on the debt ceiling, each time credit rating agencies issue warnings, each time the Fed intervenes with artificial support, confidence erodes. And confidence, once lost, doesn't return on demand. Investors don't panic slowly. They vanish all at once. Just a 1% spike in bond yields can cost the government hundreds of billions. Just one downgrade can send ripples through global markets. Just one missed auction can shift the balance of power. This is not a movie. It's math and psychology on a collision course. The markets don't need a collapse. They just need doubt. And right now, that doubt is growing because everyone knows the debt isn't going away, the interest isn't slowing, and the political will to fix it doesn't exist. So what do investors do? They hedge, they diversify, they prepare for the unthinkable. Some buy gold, others buy Bitcoin. Some bet against the bond market altogether. And each of those moves is a tiny signal that belief is weakening. The confidence game isn't rigged, it's fragile, held together not by law, but by expectation. And when expectations shift, the consequences aren't gradual, they're sudden and global. Because the US dollar is still the world's reserve currency. And if trust in the US collapses, the world doesn't pivot, it spirals. Currencies devalue, capital flees, nations scramble to redefine what safety means. This is why debt isn't just a domestic issue, it's a geopolitical fault line. And every new bond issued, every interest payment made, every sign of political dysfunction moves the needle closer to rupture. The confidence game is a tightrope, and for now, the United States is still walking. But the rope is fraying, the wind is rising, and the crowd below is starting to look up. Because when a system is held together by trust, you don't need an enemy to break it. You only need silence and time. And somewhere, someone just stopped believing. And when belief disappears, debt becomes something else entirely. It becomes a weapon, not against nations, but against the people who depend on the system staying whole. Because the moment the trust breaks, it's not the wealthy who get hit first. It's the ordinary citizen, the saver, the worker, the retiree. And when that bill arrives, it doesn't knock. For years, the numbers were abstract, distant, safe. 30 trillion, then 35, now more than 36. But eventually, every number finds a name. Every balance becomes a burden, and every debt comes home. Because when the system breaks, it doesn't start on Wall Street. It starts at your street. It begins with a letter, a notice, a missing benefit, an unexpected tax, a rent increase that doesn't stop. Because when trust collapses, the cost of borrowing rises. And when the government pays more to borrow, so do you. Mortgages climb, car loans surge, credit cards suffocate, and salaries don't keep up. The economy slows, the pressure grows, and one day, a door closes that never reopens. Not because you failed, but because the system did. Pensions shrink, hospitals cut, schools delay repairs, and public services go silent. Because the money isn't there. Not because it was stolen, but because it was spent on promises made with borrowed time. The average citizen becomes the backstop, the shock absorber, the final line of credit in a nation that forgot how to pay. And here's the hardest part. It doesn't feel like collapse. It feels like inflation. It feels like delay. It feels like working harder and getting less. Until one day, the safety net isn't there. The options are gone, and the future looks shorter than it should. Debt becomes decay, not all at once, but in layers. You see it in broken infrastructure, in rising tuition, in unaffordable housing, in empty shelves at discount stores, and full shelves in luxury boutiques. You see it in the gap between the ones who adjust and the ones who absorb. The system won't announce the crisis. It will hide it, disguise it, redefine it. It will call it austerity. It will call it restructuring. It will call it necessary. But for those who live through it, it will feel like betrayal. Because they were told the debt wasn't real, that the numbers didn't matter, that everything was under control. And now, the control is gone, and the people are left with the bill. Not the banks, not the policymakers, not the strategists who designed the illusion, but the teacher, the driver, the nurse, the retiree. And when the bill hits, it doesn't just take money, it takes faith. Faith in the system, faith in the future, faith in the promise that if you worked hard, you'd be safe. Because when the trust is broken, there is no safe. Only silent decline, disguised as normal. They told you debt was a tool, that it built nations, funded growth, created opportunity. But the truth is, this system was never built to pay it back. It was built to expand, to delay, to disguise collapse as progress. The longer it grows, the harder it is to stop, and the more dangerous the truth becomes. Because repaying the debt isn't just difficult, it's incompatible with how the system survives. To pay it, they'd need to shrink spending, raise taxes, cut entitlements, tell the truth. But none of that gets votes. None of that wins campaigns. So they keep printing, keep promising, keep hoping you're too distracted to notice. But now, you've seen it. The interest, the illusion, the fragile trust, and the real cost that's waiting at your doorstep. This isn't just about economics. It's about the contract between a nation and its people, and how that contract is being rewritten without your permission. Because the debt won't knock on every door. It will wait, quietly, until one day you open your account and realize you were paying it all along. And if this video helped you see that, if it showed you something the headlines won't, then don't let it end here. Like this video, subscribe to the channel, and watch the next investigation we've prepared for you. Because this is just one piece of the system. And the deeper you go, the clearer it becomes.